Investing overseas is a great way to protect your assets as well as diversify them for higher returns, higher appreciation, higher yields. Today I'm going to talk about four main categories of international investment. One of the things that I've seen working with clients is that when you're going offshore, it's often easier to kind of dip a toe in. And so what I'm often looking for are opportunities that are lower priced. Could be a residence, could be a citizenship, could be a property market, could be whatever, where you can kind of get started slowly. We do see people who come in and say, hey, where can I put $10 million in a bank account? But especially with the advent of things like Bitcoin, people aren't keeping as much money in the bank if inflation is high. People are looking to say, hey, where can I put 100 grand? Where can I put 500 grand? How can I make the investment prove itself? And I'm going to talk about four different kinds of investments that we would discuss in that case. If it's your first time here, my name is Andrew Henderson. I'm the founder of Nomad Capitalist. We're a boutique consultancy that helps 7- and 8-figure entrepreneurs and investors who want to legally reduce their taxes overseas, protect and diversify their assets, and increase their freedom with things like second passports. I'm also the host of the biggest and best offshore conference called Nomad Capitalist Live. And let's start with the first category, which is stocks. None of this is investment advice, by the way. You should do your own research, but stocks, you invest in stocks in your own country, you could invest in stocks internationally. You've got brokerage accounts that focus on certain parts of the world, for example, in Asia, Hong Kong or Singapore-based accounts where that's their jam. They focus on Japan, they focus on Korea, Singapore, Hong Kong, China markets. You can invest with them, and they hyper-focus on all the different exchanges in there. You've got You've got brokerages which are very international. You can invest in all kinds of different countries. People often talk about interactive brokers. They don't have as deep of coverage on some of the more emerging markets, some of the more Asian markets. If you want to be involved in Asia, for example, you'd probably want a more Asian-focused brokerage, unless you're just going to be planning on trading on some of the more basic exchanges in Asia. Interactive brokers is a long list of different exchanges that they cover, but not all of them in specific regions. Not a lot of the up-and-coming exchanges, and again, not all of them in Asia. So you can get different brokerages. Oftentimes, priority or private banks allow you to trade in certain markets. For example, Singaporean banks offer 6 or 7 different stock markets that you can trade on. Generally, you'll see the US thrown in there on a lot of these different brokerage platforms as well. But let's take a look at a few examples. One of the things right now is you see banks in Europe. They took a hit recently in the wake of Russia's invasion of Ukraine, so they got banged up. PE ratios are low. Yields are much higher than U.S. banks, where you might get 1, 2, 2.5%. You are seeing 7, 8, 9% yields on European banks. So someone who is a yield investor might look at what are the best quality European banks that I can invest in for that higher yield. One of the things about yield is whether you're investing in the U.S., whether you are a U.S. taxpayer, whether you're investing in most EU countries, whether you live in the EU, dividend is generally going to come with some kind of withholding tax. And so where you live, if you're a yield investor, might be dictated by where your investments are. And so if you can benefit from a tax treaty to reduce that withholding tax, that may be beneficial. That may affect the kind of country that you choose to live in, i.e., I'm going to live in Lisbon rather than Dubai because I can use the tax treaty with Portugal and whatever my investment country is to reduce my withholding tax. So that is why we make holistic plans here at Nomad Capitalist. Where you live can affect the investments that you have and how much of that money you can keep. So certainly stocks, having international brokerage accounts, I generally think that a lot of the private banks in like Switzerland and Liechtenstein are too complicated, too expensive for just general trading. They generally want to manage your money for you. If you want someone to manage your money for you, certainly there are banks in the UK, Switzerland, et cetera, that will do that. Banks in the Bahamas, banks in the Caymans, banks everywhere. But if you want to do more transactional trading with exchanges, I do think Singapore is one of the better places to do that. You obviously also have access to REITs, real estate investment trusts. And so if you have an account in Singapore, you have access to all of those different exchanges, which means you can buy REITs in Singapore. You can buy REITs all throughout Asia. You can buy REITs in the US. You can buy REITs in Canada and the EU. And so having a brokerage account that opens up more opportunities means you can buy real estate investment trusts in these different regions. And again, potentially the yields could be higher. You'll see, post-pandemic, some of these property markets have been beaten up worse than others. And so there may be more buying opportunities or lower ratios. That could be something that would be worth taking a look at. One thing I hear when I tell people about stocks is, I invested in an emerging market ETF on the New York Stock Exchange. So that's just not going to cover what actual emerging and frontier market investment is going to do. It's not going to cover really anything. You might get some bank exposure in there. You might get some financials. You might get some tech stuff or whatever. But you're not really going to scratch the surface of some of the best deals. The best foreign investors that I know are really deep into, for example, the Asian markets. They know Thailand. They know the Malaysian stock market. They know the Singaporean stock market. They know what's going on in those markets, and they're getting exposure that you're not going to get from some kind of U.S. or European marketed product. The same way that if you go to trade in the markets in Europe, or you get a European bank that has greater access to their markets, you're going to get access to more stocks, more REITs, more all kinds of products there. And so the next category that you can look at that's probably one of the most popular for people diversifying overseas is real estate. Why? Because of course you can live in it. People like the idea of having a lifestyle property. They like the idea, which I think is important, of having a second home that if things get bad in their own country, they've got a place to go. And I think from a psychological standpoint, one thing I've seen working with over 1,000 clients at this point is knowing where you're going to go if times get bad in your plan B is important. And so if you don't have any property somewhere else, that could be a good first start. Have a property that maybe is rented out or is, rented out as a vacation rental when you're not there. Get a little bit of yield and make sure that's available to you in Robert Kiyosaki's 3 days plan that he told us at Nomad Capitalist Live. Where can you get to in 3 days? It's going to be a lot easier physically and mentally to get somewhere if you own the property and you know what it looks like and you feel comfortable there and you know the neighborhood and your wife has the coffee shop and the kids have the playground at the street. That's going to be a good reason to buy real estate. From a lifestyle perspective, what I always encourage people is don't conflate lifestyle and investment real estate. This idea where you're going to buy it, you're going to make a few bucks on the side, I think it should have a primary goal. I don't rent my properties out when I'm not there. It's just not worth the hassle. It's not worth the tax filings. It's the goody two-shoes of the offshore world. So I wouldn't do that. Now, if I wanted exposure just as a pure investment with no temptation to stay there, I would look at a REIT, one of the aforementioned REITs. I can buy property directly, and by doing that, I might qualify for residence or citizenship. Many different countries in Latin America will offer you residence by buying real estate. A number of countries in Europe, such as Portugal, Greece, Latvia, and others, will give you a golden visa for buying real estate in their country. Countries like Thailand in Asia will do the same, South Korea. And so if you want to buy property, why not get a residence permit? Now you've got a place where you can go and get in on an immigration level as well. Countries like Turkey will even give you citizenship. St. Kitts and Nevis will give you citizenship. Not a huge fan of that, but workable for some people. And so Montenegro, with a donation, will give you citizenship. Not a huge fan of some of those projects as well. There's one or two that aren't bad. So buying your own real estate can be good. The challenge is, are you going to build the network that it's taken me a long time to build in some of these cities where who's going to manage the property? That's a consideration. So I think when you're buying real estate overseas, that's not lifestyle real estate. That's not just for residence and citizenship. There has to be some kind of scale. We've talked to folks about buying 3 properties in Tbilisi, Georgia. Then you go over and you buy 3 in Istanbul, Turkey to fix and flip. Then you go over and you buy 3 somewhere else. Bogota, Colombia has decent yields. Understand, of course, what you're looking for going in. Are you looking for a fix and flip? Not possible in all the markets. If you're coming from the United States, some markets, like Georgia, have VAT on real estate. And so there could be a tax issue that's going to eat into your profits in countries like that. Is your goal to have higher yields? A country like Colombia does have higher yields, whereas a country like Turkey isn't going to have as high of yields if you're going to buy something that keeps up with the depreciation of the lira. There are also real estate funds. We've talked about our friends at Invest Asian, which have a fund in Cambodia. They accept investment, they buy property, they manage it, they rent it out, they send you a check. And so there aren't that many of those, but certainly there are syndication deals around the world. I don't know that I would say there's as many as there are in the United States, nor are they necessarily as aggressive. But you do have basically syndication deals that you can buy into, like the one in Cambodia. There are also increasingly sites where you can kind of do like peer-to-peer stuff, fractional lending. I have personally not had success with those, where you're just putting in $5,000, 5,000 pounds. A lot of them have kind of raised their numbers to try and, like many good businesses, go after a little bit more affluent clientele and not screw around with $5,000, but they're looking for 25, 50, 100 grand. One thing, if you're coming from, let's say, North America, is not every country has this huge proliferation of apartment buildings that you would have in, let's say, the United States. where you might have more individual landlords, and you're not going to be buying individual buildings unless you're buying them directly from the developer and then setting them up as kind of an apartment building. But you don't have the same kind of complexes in some countries where you go there and you talk to the manager and you tour a show unit. That's not so much of a thing in some of these countries. Maybe it's an opportunity for someone to get in and build properties and just do a master leasing. But in terms of fractional sites where you're investing in someone else's either debt or you're just taking a position in the building project, I haven't had as much success with those. The liquidity isn't there. The control is not there. Generally, it doesn't really help for residents or citizenship. It's not really a direct investment in those countries. So I haven't done as much with those, but certainly REITs, funds, buying your own real estate can be very interesting. Obviously, another investment category would be starting a business or investing in businesses. When I look at the numbers in the US, whether it's just watching TV and watching Shark Tank or seeing some of the deals being done, the numbers are quite high. Same thing for the UK, rather high multiples in the UK on businesses for sale, even smaller businesses. In a lot of these markets, you don't see that. Certainly, I think that you have an easier time running a lot of businesses in other countries, whether you want to buy businesses and manage them or whether you want to just invest in people's businesses. Obviously, you can start your own, you can do private equity. There are crowdfunding businesses. I have done that as well, and obviously the success rate in those, as in any kind of venture investing, isn't generally that high. And so I don't know that I've had really very many successful projects on the equity crowdfunding side in places like Europe, for example, where I've tried that. But you can just get involved in the businesses. Now, Antigua and Barbuda, for example, has a program where they've got an approved list of businesses you can invest in. I would not be necessarily combining citizenship with business. Or in Turkey, if I already have a business, I can hire 50 employees. Those are generally not the best routes. But I wouldn't mind starting a new business or buying someone else's business or buying a fraction of someone else's business in order to, for example, get a residence permit in the UK. That you can do that, where you're going to contribute capital to a business in the UK, and then you can go and live in London. And if you're a foreigner, you can get some special tax treatment there to reduce your tax rate. So those are potential opportunities that have, I think the residence angle is better than the citizenship angle, but starting or buying into an existing business could be a way to take part in countries where the multiples are again lower. Tax rates on dividends could be lower depending on where you're coming from. That could be beneficial. So businesses could be an attractive asset class, just not for citizenship. And then the last thing, very simple, kind of boring investments. Obviously you've got bonds, but even term deposits. You wouldn't call that an investment, but very basic fixed income products. We've talked before about Singapore savings bonds. If you have a Singapore bank account, you're going to make more than you would in the bank and be able to move some money into Singapore dollars, up to 200,000 Sing dollars. Term deposits in some countries, whether it's Ecuador, Armenia, not so much Georgia anymore, Mongolia, although not as good as it used to be, Cambodia, although it's harder to open there. These are all places where you can get 3, 4, 5, even 5.5% on dollars. You can get a pretty good rate on euros, and you can generally get really good rates on their local currency. And there's times, if you were to buy into the Georgian lari or the Armenian dram at the beginning of 2022, as we get into the middle of 2022 now, you would have a relatively impressive return by FX standards, especially as the US dollar becomes stronger. And so as the dollar has become stronger, in some cases reached 10-year highs against some currencies, if you are taking dollars and turning them into foreign currency, you can go overseas, you can find stocks, real estate, businesses, even just putting money in the bank that could potentially get you a residence permit, sometimes in tax-friendly or even tax-free countries. Occasionally, you can even get a citizenship out of it, or at least, if nothing else, you have a residence that leads towards citizenship. Or let's say you put money in the bank in Ecuador. If you want to go and spend some time in Ecuador, you can get citizenship in a matter of years just by putting some money in the bank, just by buying some real estate. So these things not only diversify your portfolio, they help you protect your assets. In many countries like the United States, they can be, check with your tax advisor, or work with us and check with ours. They can be potentially non-reportable assets. Legally non-reportable is a way to protect assets. They can also be a great way to appreciate. When you look at a place like Ecuador and what land costs with water running right through it, beautiful fresh water, you've got self-sufficient agriculture going on there, and the prices are 1/10, 1/20th what you might pay in some parts of, let's say, the United States or even Europe. That is potentially interesting. There are some high probability investments. Now, obviously, you have to know what you're doing or you're going to get ripped off. And that's what I've spent a lot of years learning. But those are 4 things that you can get started with. Those are 4 classes that are known to everybody. We all know what they are. They're places where you can get started and make higher returns and I think do very well with that, as well as some other diversification perks.